What's going on, ladies and gentlemen? Welcome out to Trade Masters. This is Coach Tyler, back at it again. It is Wednesday, June 14th. We do this every Wednesday. At the same time, Trade Masters, little battle among friends. We're going to pitch some trade picks here in just a second. But Gregory's here, my pal from the Great White North. Greg, say hello to the folks.
Hello, folks. How's it going, Tyler?
What's up? What's up? Welcome back. Excited to battle with you.
You are the returning champ. Congratulations on besting Coach Frank last week. I did catch a few minutes of it. It was very entertaining. So glad you came out on top, buddy. I get another swipe at you.
We go round and round, man. Round and round. It never ends. It's just this eternal battle. But you know who wins every time is the watchers. The watchers. The folks on YouTube. We appreciate you guys coming out and cheering us on. We do this because we want to teach you a little bit about how to read charts, how to find trades, how to think through building different option strategies. So the name of the game here is we do 3 rounds, and each round I will pitch a stock. Greg will pitch an idea, and then you guys get a vote on which one you liked best. The best out of the 3 rounds returns to play the next week. And there are themed. These are themed rounds. Round 1 is going to be a directional round, a delta round, we call it. Round 2 is a cash flow or theta-based trade, and round 3 is a wild card where anything goes. So that's how we play. Now, you're obviously watching on YouTube, but we also have a Discord channel at Tackle Trading. So for those of you that have access to Discord, which should be anybody who wants to, because it's free, you can go check that out. There is a hangout room in there, the Trade Masters hangout, where typically Coach Matt is, jibber-jabbering, Greg, cheering us on or saying we're terrible. Just some added commentary about what he thinks about our trades. So that's always a fun way to watch Trade Masters with your fellow traders and Coach Matt. So, and the final thing, Greg, this intro, I feel like I'm droning on here, but the final thing is we have a launch, Gregory. It's like an Elon Musk rocket launch here. We are launching a SpaceX. That's right. That's right. It's nearly as exciting as watching those rockets take off. But we have a launch of our day trading premium system. It's been a while, Greg, since we have launched a new system. Yeah. So these do not come around very often. We do a lot of work on these, but we'll put the link there in YouTube in the chat window. We got a launch webinar coming up for the day trading mastery system, all about day trading, intraday charts, and really just a lot of good things. I don't want to rehash the website though, Greg. Just go to the dang website. It'll give you all the details. It's coming up in 5 days, next Monday at 8:30 p.m. Eastern, June 19th. It's going to be a party. It's going to be banging. And we're going to tell you all about the system. You're going to learn more. So it's free. Come check it out and see if you like what's inside.
If I can throw my 2 cents worth in there as well.
Yes, do.
So we've called it a day trading course. It's really a lot more than that. So, don't be intimidated by the day trading moniker. This is for anybody who wants to enhance their trading. One of the things that we do on these Trade Masters is we will look at different time frames. And the reality is to be a successful trader, you need to master different time frames because they all flow into one another. This course is going to take you to the next level of that mastery, just on that one point alone. And then on top of that, you can learn to day trade or swing trade even more effectively than perhaps you're doing now. So this is a course for everybody, but especially if you're excited. I get coaching requests all the time about teaching people how to day trade. I'm super excited that this is coming out. It's going to be concise. It's going to be just jam-packed full of amazing concepts and system objectives, all this kind of great stuff. So I'm super excited about it. Next Monday, free webinar. Come check it out, and maybe the system is going to work for you. So
well said.
Little shout out to Coach Matt and Coach Mark who put all this together, and we're very excited about it. So let's go.
Let's do it. Let's do it. Well, let's take that excitement, Greg, and let's let's push it into our conversation here. Round one, Delta round. Where let's talk directional trades, Greg. I'm feeling generous. I would like you to go first, my friend. What do you got?
You're feeling generous. I like that. Oh, you know what, man? I always do this, right? We got 3 rounds, and somehow I always have more than 3 picks. So now I have to kind of whittle down the choices. I guess I got to go with. I'm going to go with my gut. Whatever, win or lose, I'm here to party. Let's go with ABV, ABBV, please. All right. So I could have went bullish. I could have went bearish. I chose bearish. Maybe it's just in my DNA. I don't know. But I chose this for obvious reasons here. AbbVie obviously getting beat up, not doing well. Geez, all the way back to April, essentially, getting beat up after some really nasty earnings there. Recently, in the last week or so, rallied up pretty well, pretty good, got through the 9, got to that 20, failed, tried to, stem the tide, still couldn't do it, hit that 20 another time. And look at this big red candle today. Okay. And if you looked at some areas of the market today, especially tech looked really good, even after the Fed announcement today. You had a lot of pop in the usual suspects, and this thing is just not participating. This is very weak in a not so weak market. We've had breakouts on the S&P, we've had breakouts on the NASDAQ, even the small caps, which I know you're fond of, have caught up a little bit as well. So this to me was just an incredible opportunity breakdown here. Classic bear retracement into the 20 confirmed today. I think we're getting back down to that low. We may not even get, I'm not even expecting to get to 131. What I am expecting is that we get to 133, which is kind of the bottom of the body of that candle. Yes, sir, right there. I believe that that's going to get there. And I think it could happen. Like our ATR is almost $3. That could happen like literally tomorrow. Might be the next day. Might take a few days to do it. But I fully believe that this thing's going down. And ultimately, who knows? Maybe it goes even further than the 133. Maybe gets down to that 130. Either way, I don't see any upside here. You just had a crossover there. Your 50 just crossed over the 200. That is what we call a death cross. So that doesn't bode well for this stock. Everything's, the 9's curled over, the 20 moving average, they're all going down. And I think this is going down as well. This feels much like the Titanic just before it hit a iceberg there. So what I like here, very simple, very quick, actually. I'm looking at a bear put. If you could pull up the trade tab for me, sir. I am going to July 14th. So I'm going out 30 days. Okay. I'm giving this trade a fair bit of time. I'm just doing your garden variety put, bear put spread here. I'm going to do the 135, 130 for $1.50 debit. So $1.49, I give him $1.50. I give him a penny. I don't mind. Take one, leave one kind of thing. Anyway, if you look at this, your risk is $1.50. Your reward is $3.50 because you have a $5 spread there. It's a very simple trade, and all we're asking is that it continues its merry way down. I like the risk reward here. Your risk reward is over 2 to 1. I like it because it's going to be within most folks' wheelhouse, right? Most folks are willing to risk $150. If you're not, you could probably find a stop area. I don't personally think it's necessary, but if you wanted to, if you looked at the 20 moving average, it stuck the landing on the 20 moving average twice and failed. So if you wanted to go slightly above that, go to the 130, 140 and use that as a tap out point, you could reduce your risk even further and really ramp up the risk reward here. So my favorite part of this is we've already got the confirmation today. Okay. We've got a really, really great risk reward setup here. And we've got a stock that's been absolutely hammered and doesn't show any signs of turning that around, at least not how I see it. And again, we're not asking for the moon. I'm asking to get back down to the support level that it was at a week and a bit ago. So that is my Delta trade, sir. Simple, easy, concise, cheap, all the things I like about trading.
Okay. Listen, a lot that I like about this. I'm gonna shower some affection on this setup, and I'm gonna offer you an alternative, Greg, and I'm gonna see if you'll take it. Okay.
Okay.
Delightful. If you're gonna go bearish in this environment, you better pick something that has no correlation to the market, right? Whatever they said last earnings conference call, Greg, it was just like doom, doom, doom. Has not been able to find a bottom since. So definitely out of favor. And yeah, doesn't look good. Ugly candle today too. That's bearish engulfing. I like the setup. I like the pick. I even like the strategy. The 135, 130 bear put makes some sense to me. Here's my alternative.
Counter offer.
Counter offer. Yes, counter offer. So 30-day weekly, open interest 48.70, bid-ask spread about 30 cents, right? I say, why not 7 more days? Then I get to the monthly at 3,700 open interest, 2,100 open interest, 6-cent bid-ask spread, 10-cent bid-ask spread. And then my pricing is the same. But I got better liquidity. It's only 1 more week, so the gamma is gonna be similar. It's gonna, it'll move quick too. Can I offer you 7 more days, a little better liquidity for you?
Well, yes and no. I don't mind that trade. You want to give them 7 more days, that's fine. The part about a bear put is we want it to get to the short strike closest to expiration. So I actually like the shorter expiration. But if you look, this Friday is our June expiration, right? And a lot of if you go look at that expiration for me, and then look at the volume and open interest there, all of this stuff is going to bleed into that very, very quickly. So there's enough open interest right now that you could get into June 30th. And all of this, like I said, this is all going to go. So you got 7,000 contracts of the 135 strike there. So a lot of this is going to bleed into that. So liquidity for this stock really isn't a problem. And like I said, this literally, because this is almost a 3 ATR, this could happen in a day or two. So we don't really need that extra time. I actually would have liked to have gone shorter, but I wanted to keep the debit small. So I again, the monthly is fine if you think you need that. I look at that and I go 70 contracts, 48, and I know that there's going to be an influx this Friday. All of those contracts will tend to bleed into not only the weeklies, but the monthly going forward as well. So liquidity really doesn't seem to be a problem for AbbVie here. I think either one is fine. Cost is still the same. Sure, you've got a bid-ask spread difference. I'm okay with this bid-ask spread. I think you get it taken. It's a $1.49 to $1.57. You put in a $1.50 and be patient tomorrow. I think it gets taken anyway.
Fair enough, my friend. Just thought I'd throw it out. He's sticking to his guns, folks. He's sticking to his guns. Okay, well, let's see how she rolls. AbbVie bear put. All right. I will take the counter on this, not this one, but I'm gonna go on the bull side. I'm gonna go on the bull side. I actually, Greg, I got a similar type of flag type pattern, right? I was looking at Take-Two Interactive software. A couple of things I like about this. The first thing is I like this earnings response. Okay. I like the earnings gap on volume. Whatever they said, the market liked it. And I generally believe that the trend that starts on earnings has some follow through. Similar to AbbVie, gap down a couple months ago, continuing to fall. Take-Two, bullishness a couple weeks ago. I think that has staying power typically. And it's kind of based here for a while. And you've got a little bit of a short-term downtrend, it seems like. But really all it did was return to the 20. Once the 20 caught up, it's boosting it. It cleans up nicely when you go to the weekly chart. Basically, this back and forth for the last 4 weeks really is just a little bull flag to the rising 9 weekly, which has been stalwart as support over the last 6 months or so. And it's got room up to the 200 weekly, maybe 145 is I think well, the weekly 200 at least. I think ultimately it gets to 150. I'm just looking for kind of a trend line break here, Greg. Break over the high of the last couple of bars. and I think that longer term uptrend continues. It is a choppy stock. This is going to be more of a position trade for me. So I'm going to go to August, and I'm going to buy the 140 call. I'm going to sell the 150 call. I want to give it a little bit more time because I'm going for a little bit of higher target here. And so we're going to come into the trade tab. We're going to go to AUG 65 days out. I'm going to buy the 140, and I'm going to sell the 140. Just kidding, the 150. Bing, $3.50, which is fine for a $10 wide spread for me. You take a look at the risk graph on take two for this bull call. And again, 150 is kind of my ultimate target. It gets there pretty quick, close to doubling my money. The $350 risk could be a little difficult to swallow for some people, Greg. So I do think that if I wanted to put a stop loss, there's a pivot you might consider around 131 or so, 131.50. That'll cut the risk down to a little over $100. Somewhere around there. So I like it even better with the enhanced risk reward there. But ultimately, like the long-term trend, I think the short-term pause could be ready to can you halt a pause? I don't know. I think it's ready to giddy up. I think it's ready to giddy up. I like the price action the last week, and trend line break. I think I want to be long. Take two.
Yeah, it's hard to argue with the recent trend. All the way back to January, this thing's just been working its way up, held to 50 the whole time, no issue. Doesn't seem to pay much attention. I guess is my only thing here. Looking all the way back from January, it doesn't really give a rat's nothing about the 9 or the 20. As you can see, it kind of just floats through there. So I think the real key here is the 50. It's above there. It could even, I wouldn't be surprised to see it pull back down one more time to that bottom channel line you've got there. But it sure looks so sweet on the weekly chart there. Yeah, I like it. I don't mind giving it a little bit extra time, that 65 days, because again, it's still working. To me, this one's still working itself out. It could pop tomorrow. It could pop a week from now. You don't really know. So given that extra time, I do like that. The risk reward, I think, is fantastic. I would use that pivot as a tap out point myself. If not that pivot, then I would probably use that 50 moving average, because obviously it's been stellar for 6 months now. So what's the risk at say 128.5 there, Ty?
If you want the 50?
Yeah, like 128.5 as opposed to the 131. This probably shouldn't be that much. Yeah, so you're
another $50. Still pretty good.
So $1.50. I'd risk $1.50 to get under that 50. I think that would be a very good area for that stop loss. And like you said, you've given yourself enough time that hey, let it do its thing. 65 days is a long time to give it to figure itself out, figure out the next move. So yeah, I don't mind it. It's a good setup. The risk reward is what I like most about it. Risk reward with the stops. Yeah. So well done, sir.
Enough about us, Greg. Who cares what we think? Right? We want to know what the folks think.
The people.
You want the people. The people. Judge us. Greg and I love to be judged. Don't pull your punches. Just tell us what you think. You've got the bear put. Mighty bear put on that bear flag type action on AbbVie for Gregory, or the little bull call, a little position trade off of the weekly bull flag for me on take two. We'll put that up in YouTube. You guys let us know which one you like. Let's go round two, Greg. I'm going to mix it up. I'll go first.
Okay.
All right, so the theme of round two is a theta-based trade. Theta is just a fancy term for an option strategy that makes money as time passes. Unlike stock traders who only rely on direction, option traders can harness the power of time decay and sell options and build strategies that make money as time passes. So we're going to illustrate a couple of those right now, starting with me. Greg, you seen K-Web lately? I know how you love K-Web. You love your Chinese stocks.
K what?
K who? This is the Crane Shares China Internet ETF. tracks the likes of companies like Baidu and Baba, and that's all I can remember. Anyways, Chinese internet companies. Okay. And by the way, Greg, if you look at FXI, this is the China large cap ETF. You're gonna see a pretty nice little recovery in this over the past couple of weeks with some volume coming in. Today was kind of nice. I like the spot here. I like the spot here. And if you can put aside the Chinese internet, which Greg's Canadian, I don't really know that I can like get an in with Greg if I pump up the Chinese internet side of things. But I do think I could maybe I've seen Greg do lots of trades where the stock's been in a downtrend and it breaks some diagonal trend lines, right? Starts to break above the moving averages. I've seen Greg pitch those kind of trades. I think I might be able to get him to I don't know, stamp of approval off of this. Greg, look, so a couple of things. You've seen some volume come in this. Okay, today, completely ignored, by the way, the sell-off in U.S. stocks post-Fed, which the NASDAQ ended strong, but I'm thinking more like small caps and stuff. But maybe it's taking its cue from the NASDAQ. It is an internet ETF, so maybe it's like, I'm not going to follow IWM anyways. But I like the strong close. Didn't really see too much selling intraday. And I just like the spot here. This rally is different than every other one since this topped in February. These guys didn't break moving averages. They didn't break trend lines. This one did. And so I'm willing to give it the benefit of the doubt that this could have legs, that it's now going to be more neutral to bullish, whereas it's been slightly bearish for quite a few months. I just like the turn here. I like the turn here, and I want to give it a shot. So you got a couple of options. I don't mind actually selling puts, Greg. There's some decent premium, but I want to play up something different just for diversity. The IV rank is kind of low. And so I'm gonna build out a bull call diagonal spread. I'm gonna buy some calls here. Do something that's got a little more juice on it than a naked put. I think that jives well with the low IV, which means options are cheaper. I'm gonna buy options and build a debit trade, so that'll work to my advantage. I called it a bull call diagonal. You could also call it a poor boys covered call, as the risk graph looks very similar to a covered call. The gist of it is go buy a couple month in the money call and then sell a short-term out of the money call against it. A lot of variations on how you can structure it, but essentially I'm going to go to August, buy like a 2-month in the money call, and then I'm going to sell a 30-day call against it. From a strike perspective, while we're on the chart here, I'm going to end up buying the AUG 27 call, and I'm going to sell the July 14th 31 strike. Okay, that's going to be like my target, my covered call strike, where I want the stock to go, so to speak. So you go to the trade tab and you come in here, you go to August. 27 is about a 70 delta, so it's kind of going to walk and talk like the stock. It's pretty high delta there. It's only 350, Greg. I'm not going crazy, right? I got Greg money yet, so I got to be frugal here. So 350, and then I'm going to go to July 14th, the 30-day. Greg loves 30 days. Okay, Greg's going to love this. 30 days, and I'm going to sell the 31 strike, 34 delta. I actually wouldn't mind, Greg, the 30-50, but I figure let's go with the one that's got a little bit more interest here, but still almost 75 cents. So I'm reducing the cost a good 20%, which I think is good. 266. You take a look at the risk graph. Here's what she looks like. This covered call-esque look. Wanted to head up towards 31, and it might cap out. Max gains about 160 on a $2.66 trade. So I got over 50% return if it gets up to 31. So a lot more juice than the naked put would have provided. That right there is great. The only other thing maybe I would add is if you want some kind of stop loss, you could come in here and you could maybe use a 20-day moving average. You do want to give this a little bit of room. But if the breakout fails and it really has a big decline, I think at some point, 26 and a half or so, you could probably bail and cut your loss to maybe 100, 120 bucks instead of 266. That makes the risk reward even more compelling, even with a pretty loose stop loss down here. right? Giving it plenty of room. So, yeah, I'll leave it at that. K-Web breakout, bull call diagonal.
Very nice. What I like most about this is the falling wedge pattern that took basically from January till now to play out. I am a big fan of falling wedge patterns. Yeah, so you kind of grab that and then grab the top of the other one there. You got yourself a falling wedge. These things tend to play out kind of exactly how it's been scripted here. You know, they seem to be working their way lower. And then they'll crack that falling trend line. They'll get above some of those moving averages and pop out to the top. And the path of least resistance is upwards. So I like that. Other than that, don't mind the structure at all. You're getting a delta positive trade. So theta positive, you're getting some cash flow out of this. What I actually liked about most, if you could pull up the analyze tab again there, Ty, what I liked most is, what if we're in, and I don't know if you guys ask yourselves this question, these are questions I ask myself. What if I'm wrong and it hits 31? What happens then? Right. So if you hit 31, yeah, your max gain's 160 some dollars. But look how wide that that blue line stays. So roll over to like 37. So let's say it just cracked through 31 and went all the way up to 37. You're still getting 135 bucks out of this thing, right? So if you're risking 100, I think it was 110 if you use the stop loss, you're still, even if this thing goes to the moon, which, like you said, it's got a lot of room to run. Even if it goes to the moon, you're still 135 bucks by sitting there and waiting till expiration. Not that I'm saying that you need to do that, because there's a lot of other things that you can do with these types of trades. But I like the fact that sometimes when you do these diagonals like this, the sharpness of the line, once it hits its peak, it falls off very quickly. And the way you have this structured, that's not doing that. And I do like it for that reason as well. So I like the pattern. I like the setup here. Solid trade. Like it a lot.
Music to my ears, Greg. Music to my ears. Thank you. Yeah, thought it was decent. Thought it was decent. And you know what, too? There's a lot of tech stuff that's just really extended, right?
Yeah.
And so you do like the fact that, yes, it's run up a decent amount the last 2 weeks, but it ain't extended on the longer time frames, right? Just completing this longer term pattern. So if it has legs, you feel maybe a little bit safer than chasing the Qs or something in the stratosphere. So,
yeah. Good deal. Well, you know what, sir? I'm actually going with China as well with my theta pick. Can you pull up a little BABA for me, buddy? All right, so little BABA here. You know what? We have a similar pattern here. We have a rising a falling wedge. We kind of draw that, right? Very similar to K-Web there, right? It's broken out. It's getting above those moving averages there, right? Sure looks like a lot of room, at least to 100, then to probably 120 or 110, 120 after that. So a lot of room to the upside here. Baba's been a little bit odd this year to me. You know, not as much as what I used to expect it to do. But it's setting up nicely here. So my thought process was, I guess I should preface this. Look at where all the moving averages are. You got the 9, the 20, the 200, and the 50 all together here. So what this signals to me is, obviously we've had some sideways action here for these to catch up to one another, but I'm expecting a big move here. Okay. And the move I'm expecting is upwards because it has broken this falling trend line. It has gotten above these moving averages. So I think it leans more to the bull side than anything else. So what I thought was, okay, how can I take advantage of this and get a decent reward for, you know, putting some money to work? And I wanted to do it in the shortest time possible. I love credit spreads. I do them all day long. But I really like it when I get shorter term credit spreads and I can still get what I need out of it. So for my theta trade here, what I looked at here was just below the 20 moving average there, I believe is about the 83 price tag there, if I'm correct. If we go to June 30th, which is about how many days out is that? 16. So 16 days out. If we go to 16 days out and we sell the 83 put, and we buy the 80 put, we're getting 40 cents. So I need at least 30 to do this trade, right? It's a $3 wide spread. So I need at least 30. I'm getting 40 and I'm getting it in 16 days. So my theta in this thing is going to be off the charts. Okay. So what this is a very short-term play. You know what? Baba might go to the moon. I don't know if it will or not. The setup sure looks like it could. But what I'm expecting is that at least those moving averages act like support, all 4 of them. Okay. It's already confirmed by getting up above those. It's already broken the falling trend line. It's a very, very good setup. Falling wedge pattern, which is one of my favorites. Everything is lined up perfectly. And I'm going very close to the money. What's the 83 for a delta there, Ty? What was it, 83? So I say very close. It's still under a 20 delta. But it's if you look at it from a chart perspective, it looks very close. You could have went further out and further out in time. Like I could have went further out and probably got down to like the 77 or 78 and still made a trade work. But what I'm doing is I'm saying the 20, the 9, the 50 and the 200, they're going to act as at least some kind of support here. More over the 20 is what I'm looking at here. And all I want is, can this stay above this 83 price tag for basically 2 weeks and a bit? If it does, I'm making what's 40 cents on $3 there, Ty? That about 15%, something in that neighborhood.
Yeah, 40 on 260 should be. Yeah. 15.
There you go. So 15% in 16 days. I'll take that all day long. And there's about an 82, 83-ish% chance that my 83 strike stays out of the money.
Yeah, this was a good combo here, Greg. Similar themes, nice little contrast between do I sell the put, naked put, bull put, or do I go a little more directional with the bull call diagonal? Yeah, I like both the trades. I like the distance out of the money here at 83. Yeah, well structured. Like it.
Thanks,
like
sir.
it. Yep.
Congrats on the first round, my friends. They liked your take too.
Take two squeaked it out, huh?
Still big on the tech. So now, is that tech or comms? Does that fall under comms?
Take two. I don't know. I mean,
it's kind of a little of both, really.
A little both.
So
well, these days it feels like everything's tech.
Pretty much, yeah.
But I don't know. I'd have to check. I'm not 100% sure.
Not a big deal.
At any rate, I think round 2 was fantastic here. So let's see what the folks are feeling. Little K-Web action for me, playing the whole internet ETF with a bull call diagonal. Greg going with Alibaba, which I'm pretty dang sure this is one of the bigger holdings in K-Web. Otherwise, I don't know what K-Web's smoking, because it is
guaranteed it's one of the bigger ones in there.
Yeah.
So here's your choices, folks. China or China. Which way do you want to go?
China or China. That's right. Right. So, all right, we'll see what they think there. Round 3. I'm going to go first because I got a simple one, Greg.
Okay.
I got a simple one. It is the wild card round.
Because mine's not simple this week. I'm gonna blow some heads off this week for sure. So
perfect. To give them something to think about. I've got a pretty good. I don't even think it's pretty good. I think it's great. It was great enough where I'm like, this doesn't have good options, but I'm going to pitch it anyways, and we're just going to do a straight stock trade. Okay. I'm going to show you what a clean multiple time frame pattern looks like in Monday. MNDY. Let's start with the weekly, Greg. Let's start with the weekly. This is not a company that's been around for a long time, as far as I'm aware, because my weekly is only going back to 2021. But if you look at what it did when it came out, Greg, it had some mojo. Okay, 150 up to 450, had really good momentum. And then anything software related, high growth stock unraveled last year, as we know. This thing gets smoked, goes from 450 down to 100, bottoms out in October, like most everything else, and then starts to recover. And you got this really nice, if we zoom in here, you just got this really nice bottoming action. And it kind of looks like the NASDAQ before the NASDAQ went bananas to the upside. But if you look at the resistance levels, right, we've taken these out. That one's taken out. Done. This one, you're kind of above now, Greg. I have kind of taken that out, kind of above it. So I like the fact that we're moving on with our lives, Greg. We've put the past behind us. All of this is behind us now. So you have like this really compelling long-term base showing that we've transitioned from bearish to neutral to bullish. Now we're breaking the top side with a good earnings response. Always like when the turnaround is led fundamentally by a let me start. I like when it's led by a fundamental catalyst. I like when there's something with oomph behind it, such as a better than expected earnings announcement. So this whole stage, the current phase on MNDY was sparked by a great response to an earnings announcement. And if I look at the volume, you've definitely had some high volume updates, some accumulation ever since. Okay. And then you say, well, that's all good, but what about now? Well, I love what this has done over the past couple of weeks. It's not really given back an inch. And when it did, it came right back up. And when you look at this on like a 30-minute time frame, it looks kind of like an inverted cup and handle. An inverted head and shoulders pattern. As kind of a continuation, you can imagine like a left shoulder here, right shoulder here. Just kidding, that's a head. I got to remember what it looks like when somebody stands on their head. That's your head, there's your right shoulder, and then this is like your neckline, right? So you just keep hitting this level, which gives you a very clean entry point over 184 or so. And then on top of that, you have room to run. I mean, I don't really see much, Greg, on this weekly chart till like 220, right? Till like 220. So I feel like there's not a whole lot from a resistance perspective between those two levels. So she's got room to run. And so I like the upside, right? So that makes me like this directionally. And I like long stock because it's better than options from a liquidity perspective. The bid-ask spreads are pretty wide on this. It has an ATR of almost $10. It's a mover and a shaker. So kind of like the idea of a position trade / swing trade with long shares over the high here. You take your pick on the stop loss. I just think it's a pretty pattern, and it demanded my attention and it demanded a mention. So there you go. MNDY long stock.
Yeah. Never heard of Monday.com. During the pre-show, we had a discussion about this. Had no idea what this company does. Don't care. It is a pretty pattern. It is a pretty setup. I'm not a huge fan of buying $185 stocks. I wish it had great options. Unfortunately, it doesn't. So be it. You know, if you've got a smaller account, you just trade a few shares. Not a big deal, right? But when you get a pattern as nice as this one, it's hard to pass up, right? It just is. So love the pattern, love the multi-time frame. That's what our day trading course is all about, is being able to understand how to seamlessly flow through those kinds of things and find great patterns like this. So kudos to you, sir. I like it a lot. And I like the fact that you can set up a pretty good risk reward by using a decent stop loss there as well. So very well done, sir. Well, I guess I got nothing to lose because I'm down two rounds to nothing now. So I'm kind of glad about what I'm going to do now, because like I said, I'm going to blow some minds today.
Let's do it.
Let's go to my friend Lily, LLY.
Eli Lilly. Boy, this has been a gift that's kept on giving. I'm excited to see what you got on this one.
Isn't it ever? Can we go to a weekly chart on this one, brother? Look at this thing. Look at it. God, I wish I could roll back to October 2019 and buy it at 84. Anyway, it just keeps going and going and going with nary a slowdown hardly. A little bit of a pullback in early 23 there. It's just awesome.
Great.
Yeah, if you go back to the daily chart, it looks just as good on the daily chart, right? We're high basing here, okay? Ascending triangle setting up, which patterns we love. You don't have it on there, but I did look at the RSI. It's not oversold right now, or sorry, overbought right now, which is another thing that I'm always looking for. It honestly looks pretty fantastic as far as I'm concerned there. So you can see that it's not overbought. It's below that line there, which tells me there's more room to run. The sideways action that we've got for the last 2-3 weeks, that has obviously helped. It got rid of those overbought conditions. That's building up energy. The 20 is caught up. The 9 is sitting there. You know, the 50 is quickly catching up as well. So everything's working out for this thing to take another blast higher. So the question I had was, yes, generally speaking, this thing has been ultra strong. Can it continue? Yeah, I think it can. Maybe it does, maybe it doesn't. My thought was, how can I set up a trade that if it takes off, I get some love out of it. But if it doesn't take off and it continues sideways or it does reverse, then I don't lose my shirt on the trade either. So my go-to strategy when that happens is a broken wing butterfly. This is where I'm going to blow your minds. If you could pull up the trade tab for me there, Ty, and go to the July expiration, please. All right. So I easily believe that this thing can get to 480. I don't think that's there. By the way, there's nothing beyond where we are right now. This 450 level, there's nothing beyond there. So if you kind of look at the pay ranges from before, another $30 move in 37 days, not unheard of for this particular stock, especially if it does break out above its current level. So my thought process was, okay, if I can get to 480, then I could probably structure a trade that's gonna look pretty attractive here. So what I'm doing is I'm selling 2 of the 480s. You can build this as we go there, Ty. So selling 2 of those. I'm gonna buy a 460 and I'm gonna buy a 490. So this is going to give me a broken wing butterfly. It's 330, 399 debit is what you got there. So if you look at that on the chart for me there, or analyze tab, sorry, Ty. So this is what this is going to look like, right? So I've got upside. So worst case scenario cost me $400. That might be a little bit out of your wheelhouse. We can talk about a stop loss. Actually, I've got something in mind for that. If $400 is your threshold, that's great. If this thing somehow pins at 480 in 37 days, you're gonna make an absolute killing. I think 4-1, something like that. And then if it takes off even further than that, then you're still making money anyway. So what was the credit or the profit there? Go to the right hand side, Ty. Yeah, so 601 there. So you're risking 400 to make 600 if this thing goes to the moon. And if it does exactly what we needed to do in 37 days, you could have a 4-1 risk reward ratio, right? So very good setup there. Here's the problem, okay? For this to work for you, the break-even price is at about what's that break-even price there, Ty, at expiration? So it has to get to 464. So it's got to go up quite a bit to get you where you want to be, okay? The beauty of the broken wing butterfly is, if you can go back to the trade tab, Ty, and this is a little bit different, but I'm going to show you guys this. So what I'm going to do is, instead of doing this on the call side, I'm going to do this exact same trade on the put side. And you're going to see the difference here. So I'm going to sell 2 of the 480s there, Ty. I'm going to buy the 460 and I'm going to buy the 490. Now I'm doing this on the put side. Okay. So now what I'm doing is I'm getting a credit. Okay. So if you can analyze this one for me, Ty, and unclick the other one there for me. Okay. So one thing I want to see, if you can open your price slices for me, Ty. I didn't show this earlier, but so if you look here at the current price, our theta is positive, 447. It's a negative theta right now. If you pull back to like 480 or something there, Ty, your slice there.
Anyway, this guy.
Yeah, pull it up to 470, somewhere 480 is fine. That's fine. What I'm saying is, as this thing starts to go in a direction, the theta becomes positive. Okay. So the reason I'm looking at doing this on the put side is I get a credit instead of putting out a debit. It's exactly the same trade when it's all said and done. Okay. I can use the put side or I can use the call side. It's the same trade. So if you look at the risk, if you slide to the left there, Ty, the risk is 408. The reward, if it goes to the moon, is 600 and something, I think, just shy of 600. So the trade is the same, but now I'm getting to collect 592, okay, instead of putting out X number of dollars. Okay, so the risk and reward. Now, the only thing that's different is that purple line that you can see. That is different. Okay, so if I'm trying to trade this, if I'm trying to change this trade, it's a little bit different. Okay, I may have to give some of that credit back, whatever. But at the end of 37 days, this trade ends up being the same. The difference is I get to put some money in my pocket, and the theta on this trade is considerably higher. So if you can uncheck this one and bring the other one back up for me, Ty. So the theta on that was 8. So the theta on this at the same 480 there is $4. Okay, $4 of positive theta per day. Okay, whereas the other one it's $8. So this is where I'm taking the same exact trade. I'm changing the put and call side, and I'm changing the theta dynamic of it. And that's what I want, because if it's going to sit there, if it pops up and sits there like it has for the last 2 or 3 weeks, I want to be able to collect as much money as possible. So for me, doing this on the credit side versus the debit side is what I'm after. And that's why I would set this up in this manner. So I love the trade because I think Eli Lilly is strong, but I've also got choices here where I can do this for a debit or I can do this for a credit. And it's the same trade, only the difference is some of the parameters, right? Some of the Greeks are, as they are, change a little bit, but it also changes what I'm going after. So like I said, we get a pop, which we need. Either one of these, we need a pop. But if we get that pop like we've seen recently, and then it trims sideways, you're going to sit there and collect more by doing it on the credit side.
Interesting. Okay, so 460, 480, just the visual here, 490. So we're looking for the run up towards 480.
480, ideally.
Yeah.
But you only got to get above 460 something, 462, 464 to break even at expiration. So you got 37 days to do that as well. So it's not a tall ask when you're an $8 ATR, right? So
yeah. No, I agree. Yeah, really good example of a situation where a broken wing butterfly comes in handy versus a straight bull call diagonal. Because if you think $4 or whatever it was, if you think that's expensive, it's less than a single share of stock. So, I mean, try looking at the cost of a $20 wide bull call spread. This broken wing butterfly was the cheaper variant for sure. So, yeah, nice. And just a gorgeous chart.
It's hard not to like.
What's amazing is they keep delivering. Like whatever they're doing with their drug pipeline and forward projections, like they're killing it. They're killing it.
These guys used to be, I haven't looked at them in a while either, but these guys used to be a rock star dividend payer too. I don't know if they still are or not. I haven't done their fundamentals, but they used to be on my list of dividend rock stars. So yeah, Eli seems to be doing real well.
Printing money. Love the pick. All right. Well, let's see if YouTube loves the picks. We got little Monday.com bull breakout example versus an Eli Lilly. Just gorgeous long-term chart and broken wing butterfly on the ascending triangle breakout here. So let us know what you guys think.
Let's see if I can prevent you from getting a hat trick. Unlike Mark Stone of the Golden Knights last night, got a hat trick in the Stanley Cup Finals to win the Stanley Cup. Pretty impressive. Not that I'm a Golden Knights fan or anything, but it was pretty impressive. So
yeah, good for him. That's exciting. While they're voting, Greg, do you have some alternates you want to throw out? Bonus picks here?
Yeah. So I did. So I guess I should have chosen this one, but Microsoft actually looks really, really good right now. If you want to pull Microsoft up, going out to July 20, obviously this is just your garden variety breakout. Microsoft's been strong for a while. Little, really mini cup and handle pattern here. It looks amazing. Looking for that breakout. The trade that I liked the best was a July 21st bull call, the 335, 350 for 678. If you want to go to the trade tab for that one, Ty.
July, right?
Yeah. So buy the 335, sell the 350. So you're looking at 668 there. I had a stop loss on this one at 323. So 668 might seem like a lot of money to put out, but you also have a $15 wide spread here. But if you look at the chart, 323, if you look at the chart, or go to the analyze tab first, that's cool too. So 668, you're not going to risk that whole thing. You're going to risk 340 to make a potential, what is it? About 900, 830. So you risk 300 to make, just shy of 900. I'll do that trade all day long. 2.5 to 1 with Microsoft's been just crazy strong litely. So that's a little one. Skechers, actually, I'll give you one more here. SKX, little Skechers action here. I like this one. This one's got a really good breakout level right around that 55 up there. You'd see that high. It's getting close. This might need a day or two. Unfortunately, the options on this are absolutely terrible, but I really, really like the breakout here. If this thing can break out of that high there, you've got some decent run here. So Skechers, I would put on your watch list as well. Sending triangle breakout, box breakout, whatever you want to call it. I like Skechers. Again, it's going to have to be a stock trade, kids, because the options on this are pretty terrible. So
love it.
Yeah,
two good ones, Greg. I was just trying to get the chat up on YouTube and I could not. So you'll have to tell me what the
well, the folks they threw me a bone, Tyler. They threw me a bone. So Lily took it actually pretty handily, actually 72% to 27. So they were kind to me, and I think it's for the same reason. They were sitting there going, Monday.com, what the hell do they do? Everybody understands Eli Lilly, but no, congratulations, sir. You pulled it out again. I'm if I could roll it back, if I could go back an hour and then maybe throw that Microsoft in there, I might have been able to take you out. So
on the first one, yeah.
Next time.
The obvious setup was good though. I mean, listen, I among the bear setups, it's quality. So
well, you want to hear quality? Is last night I was up very, very late looking at charts. And so I put in an option play on that AbbVie last night at about 2:00 in the morning, and it got taken today. And so
it even gapped up for you at the open.
And all I did was buy a straight put. So I'm a happy guy today. So
we're all okay. So listen, Greg didn't even have to win. He already won.
If that thing keeps going south, I'm a happy man. So I had planned to turn it into a bear put, but it was such a great candle today. It's going to stay a long put until such time as I need to change it. So
yeah,
good.
I hope she gets smacked down tomorrow. So sure. Winners all around. Yes. Let's send them out, Greg. Appreciate you guys for coming out today. As always, come join us, tackletrading.com. I get a 15-day free trial if you want to check out a premium membership. And next Monday, the Day Trading Mastery event. The launch event, you're going to learn all about that trading system. So be sure to sign up for that using the link down there in the chat window. And why don't you smash that thumbs up button on your way out? All right?
100%.
Throw us another bone. You threw Greg bone. They're throwing bones. Give us a thumbs up. Give us a thumbs up. Right. We'll be back next Wednesday for another round. 6 more picks. We'll see you then.
Awesome. Thanks, everybody.